And for review of Tuesday's trading activities at the equities market, we have Didion Erwan. Eddie, the gains couldn't be sustained after all.
Good morning, Jimmy. You're right. Well, some of us already got our hopes up, but then those sentiments were short-lived. The sell-offs across large caps such as MTN Nigeria, GT Bank and Seplat led to the market's largest decline since July the 6th, with the all-share index falling 0.54% to 24,650.16 points. That brought the month-to-date return to plus 0.7%, while the year-to-date losses increased to minus 8.2%. The equity cap was also lower by 70 billion naira at 12.858 trillion naira. The total volume of trades declined by 11.5% to 150.39 million units worth 1.97 billion naira, and all of that changed hands in over 3,700 deals. Mutual Benefits was the most traded stock by volume at 26.92 million units. Now, that stock gained 10% yesterday after the group released its earnings, showing an increase in profit after tax to 634.97 million naira. So that's probably what drove sentiment for the stock. Market breadth was negative yesterday. We saw just 14 gainers against 17 losers. Now, the sectoral chart was mostly negative. Banking was down 0.45%. Consumer goods lost 0.13%. Industrial goods was unchanged. Insurance gained 0.43%. Of course, that was due to the 10% gain on Mutual Benefit, while oil and gas shaved off 5.20%. That was due to losses on Seplat and Total. But joining me now to talk more about the market is David Adonri, a stockbroker at Highcap Securities. Good morning, Mr. Adonri. Thank you for joining us on the program.
Thank you very much. Good morning, but the line is a little faint.
Mr. Adonri, if you can hear me, the gains we saw at the start of the week was short-lived yesterday. Do you think we're getting to the bearish market?
Sorry, if you're asking whether
I'm asking if those gains we saw in the market at the start of the week, you know, that will be it for the week and we're getting back into the negative zone.
Oh, yeah. The market is going to be volatile for quite a while. Occasionally, we would have a spike in appreciation upwards, and then subsequently there will be decline. But generally, it's a weak market situation. We are right now in a buyer's market, and if you look at the second quarter earnings that are being announced so far, none of them gives any indication that the market situation is going to improve, because it's a direct reflection of what is happening in the economy. And the state of the economy is likely to be weak for quite a while to come. So the general trend is for a bearish equities market. And so what is happening now is that equities are not very much involved. So financial assets are migrating more towards the fixed income space. So that is what we are going to witness for quite a while to come.
Well, thank you, Mr. Adonri, for your input on the program. David Adonri is a stockbroker at Highcap Securities. We'll leave you there for now. Over to you, Chimi.
Thank you, Eddie. We'll take a break, and then when we come back, we do a crossover to London, and then back to you.